I've got a question for you straight away, okay? Now, I have a big problem, okay? Because I don't know what the difference between a neobank and a challenger bank is. Does anybody else know what the difference between a neo and a challenger bank is? And you see, I think this is the problem, right? Neobanking. I think we need to discuss what the definition of neobanking is first. Can you help us, Thomas?
Sure. As a Greek, I'm very good with etymology. A neobank is basically a new breed of bank, if you think about it. And how are these different? I mean, the banks of old were mostly utility-like because they offered, well, let's face it, right? Banking products are mostly commodities. It's deposits, it's payments, and credit, pretty much. The old banks used to offer these in an undifferentiated way. Neobanks tend to focus on specific user segments with specific user needs and focus on addressing these needs in the best possible experience. So this is how I would define neobanks. Pablo?
If you will ask me about how will I define neobanks, for me on one side, what I realized from the past, first, all the neobanks and fintechs, they were talking banks are bad. So why banks are bad, generally speaking? And how, let's say, old school neobanks were defining banks are bad. First, they are not transparent, so it means I don't even know how much I pay. So that was the first principle for myself. Second principle, it was they are too expensive, so they are charging me fees for everything. And the second point is that they don't care about the customers, no? So that's how we saw the first neobanks appearing. Initially, most of the neobanks were unregulated, so they didn't have any banking license, from my point of view. Now, it is true that we will also see with the Thomas experience and Snappy the fact that it's changing also a bit. And also the fact that the first neobanks, they were basically focusing in one specific niche of customers. Why? They were actually focusing on one specific niche. What do you think they were focusing in one specific niche, the initial neobanks?
I mean, if you look at the big guys, it was mostly travelers and Forex-related items. So it was individuals with a more international lifestyle that had specific needs.
Okay. And if, for example, before having this panel, I was checking on ChatGPT. And I asked ChatGPT, what is a neobank? Neobank was basically saying, ChatGPT was basically saying a neobank is a financial institution which doesn't have physical branches. Then is ING a neobank? No, probably not. Because it's not started in some countries just not having branches, and it was not really fully a neobank, it was more a digital bank. So is there any differentiator between neobanks and digital banks? Because we got in every country, we have digital banks, which basically they are still using the technology from the traditional bank, and the only main difference, they change the name, and they don't have branches, and the full experience is fully digital, no? So we need probably to differentiate here what is the difference between digital banks belonging to traditional banking groups and neobanks, which for me in some cases, well, most of the cases, the technology, they don't have a dependency from the technology from the traditional banks, no? And so basically the full thing is built from scratch because it has some advantages, no? Probably asking to Thomas here because he's been at the Snappy since the very beginning. So you were employee number 2, number 5?
Formally number 4,
okay.
Officially number 2, unofficially number 2.
So I think maybe one relevant thing, if any of you are thinking on building a neobank, regardless if you belong to financial institution or if you are building from scratch, maybe it's good to understand why did you guys decided to create a Snappy?
So we are part of Piraeus Group, which is the largest banking group in Greece. And Piraeus's thesis for Snappy was based on a dual hypothesis. The first leg was that they felt the future of retail banking was with the branchless, mobile-only model of Revolut and Friends. And they decided that they needed a platform to grow this area and to innovate. And the second leg was that they could not build it on their legacy infrastructure and organization. Hence, they decided to go for a greenfield approach. It so happened that Natec, who is the venture partner, was also looking to build something similar. So it was a marriage where, Piraeus put in the banking expertise and capital, and found in Natec a reliable and a flexible partner who has skin in the game. So it was a good setup.
Okay. And how that differs, let's say, your offering from other traditional neobanks, or let's say older neobanks, no? Because Snappy, you're relatively new in the ground.
So in the Greek market, we tend to have two breeds of bank. We have the imported neobanks, and we have the local traditional banks. The imported neobanks, they offer best-in-class user experience, truly branchless distribution model. Where they do lack is they're not localized. And to be more concrete, they are not connected to the local payment rails. So you can't do the local peer-to-peer payments. You can't pay your utility bills, which is pretty fundamental for your everyday basic bank. Second, they don't have the local language on the app or on the call center. So for your basic bank, you would expect to be able to converse in your mother tongue, right? And last but not least, they have not fully passported to Greece, so they are not licensed for credit in the country, so they can't lend. On the flip side, the traditional banks, they do have the local aspect. They do have a wide array of products, but even though they do have mobile offerings, they're stuck in a more branch-centric, so to speak, model. So Snappy wants to be the best of both worlds, the local neobank, and offer the branchless mobile experience with the local utility and credit.
Okay, so that has the advantage, obviously, that from an organic growth point of view, you may do it better than the Revoluts and the big ones, because you will be fully localized, because you will be fully licensed in every country. Also, it has the disadvantage that you cannot grow that quick as
Indeed.
they do. But obviously, it has the advantage that you can be likely more competitive for the customers, that they actually value the fact that they have everything on their language, the fact that they have a local IBAN, the fact that they have, for example, beneficial agreements on buy now, pay later with the local provider, local merchants, etc. Right?
Indeed, I would say it's a slower growth model with the full banking license. But it's more stable. Every step we take, we don't need to revisit at a future stage because we are, so to speak, compliant by design.
Okay. And regarding the process, no? Because obviously building a neobank is not easy. It's quite tiring, especially on the regulatory side. There is a lot of headaches if you want to be compliant not only with the one regulation but with the, let's say, European level. So what are the challenges that you face when you try to build a Snappy, no? From technology-wise, compliance, regulatory-wise, etc.
Indeed, it's certainly harder than building an EMI. On the regulatory side, especially in Greece, where a lot of things were a first for the regulator, we had to invest time in explaining based on first principles why some new things made sense. Also, given that regulatory controls have implications on the technology architecture, there was a bit of complexity there in aligning with the regulator and translating the controls while we actually build the thing. And also, I mean, the fact that we are part of a big banking group, it certainly has advantages because we are fully funded and we get banking expertise. But definitely, we don't have the risk profile of a standalone entity, so to speak, because the risks that would hit our our entity would contaminate to an extent the group as well.
So what comes first, regulation or technology?
So I would do regulation first because technology is a scarce resource. It's expensive, and it's where a lot of the value comes from. So to minimize waste on the technology side, I would first have a very clear picture of the architecture I'm building against, which is driven basically by the customer and the ever-present stakeholder in banking, who is the regulator.
Okay, so it's interesting you take an approach which is a bit different than the first neobanks, which was basically, I don't care about regulation, I care about customers, so I don't care what regulation does. You are taking the opposite approach. You care about regulation, then you go and relate it into the customer.
Yes. That model was very fast growth, and it made sense when the advantage of being branchless was big to capitalize on this and grow fast. But I think down the line with this model, you would have to go to a brownfield approach after you upgrade your license to a full banking license. And this is where we'd expect difficulties if we hadn't done it from the beginning.
Okay, and how difficult it was to align the different stakeholders, no? Because considering also Piraeus on the back, which is quite traditional mindset, how difficult was to align stakeholders regarding what good looks like from a digital banking point of view, no, or perspective?
I think it's always important to engage the control function stakeholders early to understand what your solution constraints are. And then within these, try to build to maximize shareholder value. And at the crossroads, at trade-offs, make them very clear to the decision makers what the trade-offs are on compliance versus profitability.
Okay. In terms of expansion plans, do you have any idea outside of Greece of what it could head next, if it will be wider functionality, new regions, etc.?
Snappy is Piraeus Group's vehicle for international expansion. If you ask me, it's a bit smarter if you expand without branches than with. So yes, we do plan to expand after we have a good track record in Greece. We'll start expanding to other European countries, but which is yet to be decided. Okay,
and if you will need to build it now from scratch, because it's been 3 years since you started, effectively 2 years since the proper build out. So what will be your recommendations? If you will need to recommend somebody who wants to build a neobank from scratch, what will be, let's say, top 3 recommendations that you could give?
So I think sequence is very important because you don't want to waste time. So the right way, I think, to do it is to have a very clear sequence. First, make the value proposition very clear. Who are you solving for, and what are you offering them? That's the customer side of things. Second, clear the regulatory field. Make sure you've dotted your I's and crossed your T's, and it's all clear. And then start the delivery, the technology delivery. I think it's also important to have a flexible technology partner who has a stake in the game. So regulatory, compliance, and the third for me is the people. I mean, if you think about a bank, it's a license with technology and people. That's it. So third, but not last, obviously, is the people. So make sure you have top-notch talent. And I would err towards generalists because you're a smaller team that needs to cover a broader scope. And make sure you have a very clear plan to attract talent and recruit fast in line with the build-up of the product.
Okay, so if I have to summarize, I will say first is pick a niche. So understand well the value that you provide of that specific customer needs. Second is don't underestimate the regulation. And third is mainly move fast. And then the fourth one is basically pick the right people.
Fast, but in order, I would say.
Yes. Indeed. Okay. Thank you very much. I think we are fine with the time.
Well, you've done very well.
Thank you a lot for hosting us. And
If you can just stay.